If you want to make smarter business decisions using your books, this is the only quick tutorial you'll need. I've tested the most popular bookkeeping and accounting tools out there, and I'm going to show you exactly how to read your numbers in a way that actually helps you make better decisions. Stick around till the end, because I'll also share the one metric that most business owners completely overlook. And it's often the difference between staying stuck and scaling profitably. First, you need to make sure your books are up to date. It doesn't matter what software you use, if your income and expenses aren't logged properly, everything else falls apart. So before anything, double check that all transactions are categorized, all accounts are reconciled, and you're not guessing when you look at your numbers. Once your books are current, look at your monthly profit and loss report. Focus on trends, not just totals. Are your expenses creeping up every month? Are your top-line sales staying flat while your ad spend rises? If so, it's time to adjust either pricing, costs, or your marketing efficiency. Next, review your gross profit margin. It tells you if your product or service is actually profitable after the cost of delivering it. A low gross margin means you either need to charge more or cut costs. Too many business owners chase sales without realizing they're scaling losses. Then check your net profit margin. This shows what percentage of your revenue is left after all expenses. It's your real profitability. If it's under 10%, dig into your biggest operating expenses and ask, does this cost directly help me generate revenue or save time? Cash flow is next. Just because you're profitable on paper doesn't mean you won't run out of money. Use the software we're working with to run a cash flow report. Look at what's coming in and going out over the next 30 days. If there's a gap, plan ahead. Delay expenses, collect invoices faster, or renegotiate terms. Now, here's the part most people miss. Your customer acquisition cost versus customer lifetime value. You can usually calculate these using the same software we're using here. If it costs $200 to acquire a customer and they only spend $150 with you, that's a losing game. Aim for a 3.1 ratio or better, 300 plus lifetime value for every $100 you spend to acquire them. Finally, use all this data to plan forward. Look at your trends and ask, if nothing changes, where will I be in 3 months? That's how you start making strategic decisions based on your books, not just reacting. Remember, the software we're using here makes all these reports easy to access, especially if you're not a numbers person. I've linked an exclusive free trial in the description below, only for viewers of my channel, so you can follow along with your own books while it's fresh. Here's the key takeaway. Your books aren't just for taxes. They're the cheat code to smarter business decisions. When you know how to read them, they'll show you exactly what to do next. Quick recap. Keep your books current. Read your P&L monthly. Track your gross and net profit margins. Monitor your cash flow. Compare customer acquisition cost to lifetime value. Use your data to plan ahead, not just look back. Don't forget to grab the exclusive free trial in the description. It'll make following these steps 10x easier. And it's only available to viewers of this channel. Thanks for watching.